Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Marco.
Hey Felix, how are you?
Good. How you doing?
Great.
Awesome.
Fun
So
stuff.
let's this tape is not really moving that much. I guess it's waiting.
Yeah.
It's waiting for this FOMC meeting today at 2:30. Frankly, I don't know what he's going to say, if anything different. He's pretty adamant a few weeks ago that, hey, nothing's going to happen. We're waiting to see how this all plans out and this all works out. Sorry, and if people getting back to work and so on and so forth. One thing I did read yesterday, which I thought was interesting. In the past, it would be important, and that was that the Chinese government was basically, they don't ask, they ask, but really they're telling you to they're telling the local banks and whatnot to reduce leverage, and as far as personal loans go. And in the past, that was significant, right? It's whenever you're trying to tell people you can't borrow as much, it contracts. It's a contraction type of action. Chinese trying to contract a little bit would ultimately have ramifications around the world. Like I said, in the past, that would actually mean something. In this market, it's been a rocket ship over the last month, and nothing seems to matter. So we'll see if what Powell says this afternoon means something, but I suspect it's not going to mean that much. Just some one thing I just wanted to point out also was we actually looked at this this Hyliion. Did you see this Hyliion news? So we looked at this Hyliion about a week and a half ago, and there was someone buying call options for last Friday. And then I just found it interesting that today, which is a few days late, for that buyer, Hyliion made an announcement, and they created this forum and where they were putting in I didn't read the whole thing, but I saw that it was like they created some group that people were gonna somehow associate themselves with Hyliion and this EV sector, and I see the stock jumped a significant amount, and I just thought to myself, did someone know that, or how did they miss the date, or were they supposed to announce this last week and for whatever reason they didn't? And I'm always in the belief that when someone's buying calls and an announcement comes out right around that time, that someone sort of had a heads up of that announcement or knew something was going on there. Right. So I just thought that that's interesting to see and note. But if you look at Hyliion, let's just look at how it traded, just to give you a sense of what's out there in this market and how it's going. Something like that on this side of the mountain takes the stock up, $5, $6, $7. We're on the right side of the mountain, which is, a lot harder to trade and frankly invest in. And, the stock jumped a couple of bucks. Let's see if we can get closer here. Let's see, 1 month. So we were watching it around here. I think that the buyer was for April 1st for this week. And then it came out 3 days later. The stock traded $12.60. Okay. And there was some buyers. There've been some buyers obviously this week as well, but the stock traded $12.60 and then traded off, was up even higher pre-market. I think that, these types of names are under a significant amount of pressure. All these EV names are just, we keep on showing you some of the lead horses in the space, and they are, let's call this 10 months. They are something like Tesla, having a little bit of trouble here, having trouble at 700. This move hurts. Okay. That hurts. That does a lot of damage to the stock. It takes Usually it takes more than a few weeks just to come back. If it does, then it's really strong, right? If the stock goes like this and then shoots back up to 900, you know that this thing is extraordinarily strong. The fact that it comes down here and now it's waddling around, it's got to really show strength by breaking through 700 with good volume and trying to turn this. We've been talking about this, the difference between the 200-day and the 50-day and how it widened out so much here. And this needs to come down a little bit. And that's why you get this sort of squeeze over months. Usually it takes months. At some point, it's going to make a decision whether it wants to go back up or it's going to come off. But I would watch the 700 level with good volume and this 50-day moving average coming down and the 600 level. We've talked extensively about Tesla over the last couple of weeks. It's called the last couple of months, actually. From here, calling 500. Even saying that there's risk to 400, and we'll see how it plays out. It's the story is getting a little murky with sort of autonomous driving, and and sort of what we pointed out the other day. I think this is your lead horse. So if you want the EV space to work and to work well, then you want to see Tesla obviously trade a lot higher. We also been looking at NIO. And we have a similar chart to Tesla. So these are your big horses, your leaders. This one's trading a little bit worse. It's a little bit more defined flag, if you will. So this you're looking at it's just the opposite, right? It's the opposite of what we're generally looking at here. You can either do it something like this or it's something like this. It's looking something like that, and that's going to make a decision whether to break through or to break down here. I suspect my guess is a breakdown. My guess is a breakdown. Okay. I think they got to clear out a lot of this noise. This 2 months from, let's call it right here, September, November. Let's call it from October. So from October 16. $16, is that right? So around $18, sorry, $18 to, you go from October, November, December, reach the high here. Okay, so we're looking at December. So just boxing it out here, you had a sharp move from 18 to 56 in 8 weeks. Right. And I think the market wants their money back, essentially. I think that, these people who are long here, sure, there's some people that took profit. Some people got longer here, but I think the market wants eventually to come break this and test this a little bit. Right. Just a guess. It's sort of the price action, and this is heaviness. And again, this is it's a dangerous side here to be trading. To get long again, you'd like to see this 50-day sort of, instead of looking like this, to spend a little bit of time here and then eventually start showing that curvature back up like that as a 50-day, with the long term maybe never really moving and sort of just kind of like going this way. That would look more constructive. This right now looks a little bit dangerous. Okay, so right. that's NIO, that's Tesla, and then you have your names like that we did that the Hyliion. Then there's this XL, which is even some call buying today in XL, but same type of thing here. Remember, all these trade at $10 is what I'm saying, and I do believe most of them will trade $10. But you look at something like Blink, which had a good couple of weeks, and again having trouble at the 50-day here. It's got to get through with good volume and good action. So all of these, you're looking at the lead horse. You're looking at they're all trading in this space of EV, and it just feels like if you look at all the different names, they're just having trouble. It doesn't matter what they are or what the story is anymore. Now the investors who are long this name are saying, is this dead money for a while? Did it have its big move? It's going to have to prove itself. It's going to have to actually not just make the cars, deliver them. It's what's the next trick, right? After they do that, show me the demand again. Show me that there's increasingly more buyers. This is what we're going to have to see in order to get this whole space actually going back again. So right. That's something to look at. All of these EV names, as remember on the right side of the mountain, the psychology is that on the dips, people are buying those dips, right? The average person is starting buying those dips. But the reality is those what's going to move those stocks over time is when the big guys, what are the big guys doing? If the big guys are getting in, that's going to, if BlackRock is getting in, BlackRock is, for a year and a half, they were talking about EV and they were getting in and they were pushing these stocks up. It does take them a while to get out. I don't think they're getting out of everything, right? But it does take them a while to get out of, let's call it, half, 50% at near the top. We started seeing a lot of the hedging and a lot of the call overriding near the top. So, that move down, again, they might reduce their shares by 40, 50%. And 40, 50% for those guys is millions and millions and millions of shares. So that's what you're fighting against. And what's happening is, again, supply demand, you're getting bought, you buy here, you trade it lower. You're now doubling down here, you're trading it lower, you're tripling down, you're getting filled up. And what usually happens to the average investor is that by the time it's finished, the average investor is showing significant losses. And they're the ones that puke it at the end, or they're the ones that go through. Now, you have this new slogan that you're hearing, diamond hands, where people say, I'm just going to hold it forever. And sure, that might work, but forever in some of these names could be a long time. For the NASDAQ to get back to those highs, it took 20 years. So forever is a long time. And I'm not sure forever means the same in investing for everyone. And, in every facet of their life, even at 22, forever is like at 30, you're still long NEO and it's still trading $20 and you've been in it for 10 years. Forever, that's forever, and people saying, what, I'll just get into another stock. So EV, the concept is amazing. That's where the market's going. But it's when I talk about, I'm not negative on EV, and I'm not negative on any particular company as far as what they're trying to do or their product. I'm concerned about the stock price, which is not a reflection of the idea that the world is going to be a better place. And I think that's important. It's hard to separate the two sometimes. And there's a lot of names out there right now where big investors are taking a look at, does the story match the stock price? That's the important part. Okay, that's the important part. Show the math. Let's see the math, and let's see if the math makes sense. So we'll do one a little bit later today. We'll as an exercise on how to think about it anyway, and we'll go from there. But I say this HYLN was interesting. We talk about the EV, and then let's talk about another name that we highlighted just a couple of days ago. Few names: CCL, Carnival Cruise Line, and NCLH. Recovery. So you see what happened there. Let's take a look at. They were buying CCL, they were buying call options, and NCLH for the earnings. You look at this and they're buying the 29 calls for 60, 70 cents. The stock traded pre-market close to 31, 30, 31, and starts shooting up, but opens up, shoots up, and then comes back down. On this, let's call it, let's just go to sort of a minute graph. Let's see what the minute graph says on CCL. Yeah, let's go back here. CCL here, minute. Let's go 2 minutes. I want 1 day, sorry about that. Let me just move this up. But I wanted to show you how these things trade. When you're trading the 1 week, when you're trading something like 1 week options, it's important to understand sort of how, make it bigger here. It's important to understand how these things trade, and so this thing shoots up. It shoots up to 30.60, and all the way up here. The options, if they were bought at 29, and people paid anywhere from, I think it was 50 to 70 cents on these things. And it starts trading 30.60. They don't necessarily have to actually sell the call options, and usually they don't. What they actually do is they sell stock up here. Okay, or they sell short stock. So many people, instead of just getting out of the calls, they'll start saying, okay, I could sell shares all the way up here, and now they're short stock and they're actually still long the call. So they actually made, maybe let's call it 100% on average, 100% on the calls, right? Because the calls went from, let's call it 60 cents on average to 360. If you averaged 30.20, if you average somewhere around 30.20, selling short, okay, you would have made 100% on that trade, right? Because that's parity. What 30.20 on a short is $1.20, okay? From 29 to 30.20, that's $1.20. So that's parity, and you're short there. If the stock trades now down to 29, they can make that $1.20, and then the 29 calls is still valued at. Let's just take a look where the 29 calls are, just to show you how they can turn this into a much bigger winner than 100% by selling the calls, especially if they're selling stock themselves. So CCL here, the 29 calls right now are 50 cents. So you see that?
Yep.
They're 50 cents. Okay, so they paid about 60 cents. They paid about 60 cents. Okay, now if they sold stock on average at 30.20, say 1 million shares, because they're long 10,000. Sorry, they're long 10,000. Where are we? Say they're long 10,000 of the 29 calls. They paid 60 cents. It goes up in the morning, and they're shorting stock. They're shorting, not touching the options. They're just shorting stock all the way up, and they short 1 million shares at 30.20. Okay, they short 1 million shares at 30.20.
Okay.
You see that?
Yep.
I want to make sure, because it's could be a little confusing. So we short 1 million shares at 30.20 against my calls. So I'm long calls. I short 1 million shares at 30.20. I'm not worried about the call value now. What I'm looking at is, can the stock go lower? And if the stock trades through 29, and now it starts going all the way to 29, I actually make $1.20 on 1 million shares. Okay, and I only lose 10 cents on my options. So I wound up losing 10 cents, and I make $1.20. So net, I made $1.10 on a 60-cent trade. So they're actually making more money. And in fact, what they did by doing what I just said, by coming into the earnings, they're long calls, and then they're shorting stock. What they've done by doing that is they've taken the calls and turned it into puts. Okay, so that's what it acts the same as the puts. So the 29 puts are now 52 cents. So they basically have turned, right? Because if the stock goes to 27 and they're short 1 million shares, they're going to make from 31.20 all the way down to 27. They're going to make $4.2 million. Does that make sense?
Yep.
So by shorting the stock on the way up here and averaging a price of 30.20, they've essentially locked in certain gains. They locked in 60 cents, but they have a chance to make a hell of a lot more if the stock trades down to, say, 28, 27. They will make all of that money from here to here on the stock. Yes, they will lose on the 29 calls, but they'll make much more money being short the stock. Okay, that's how the big guys can trade, or in many instances trade the front week options. They'll be in there pre-market if the stock trades all the way up, and they're the ones selling it against some calls that they have on. You remember in the aftermarket, earnings come out after the close. If earnings come out after the close, the options don't trade. But as the stock goes way up, if they say, great, we got what we wanted, now we're just selling it, and they'll lock in those gains. And in fact, they have the option of actually getting a lot greater gains if the stock actually goes the other way. So a lot of times you'll see Amazon after the bell trade up $100, $200, $300, and then by the next morning on the opening, it's down $200 because they said something negative on the conference call. So these hedge funds, they know what the story is. They know what they're looking for. If they get the headline number to be good, and they know that there's really risk, or they've talked to 1 million managers through consulting calls, and they know that managers are actually worried about the next quarter, the initial print might shoot it way up, but they know that the conference call is coming, and they know that there's probably going to be some negative bent to what they're going to say. And so they're shorting up there. And then when it comes back down, they make a fortune on the up and the down. And you wouldn't know. You would think, oh, the call options, they lost on the call options. They might have killed it. They might have actually shorted stock. Yes, the call options went to zero. They don't care. They made all that money on the short position of the stock, which no one gets to see. So even when they lose, when it looks like they've lost, you never know. They could have made a ton of money. So that's the point on a lot of these things. It's interesting to watch as they develop, and as they trade aftermarket and then pre-market to see, oh wow, it looks like they're selling these calls, and then they're selling these stock against these calls, and on the open they might just sell the calls as well, and it'll look like they lost, but in fact they're making a lot of money.
Nice. Wow.
Okay, so it's a tricky circle. You'd have to go through it, what I just said a few times. But think about what I'm saying and how I'm positioned. Same thing with puts. On the puts, they buy puts. On the earnings, the announcement is bad. On the headline number, trades down, and they know that no, they're gonna raise estimates and they're gonna say that everything is good. And they come in and they scoop up as much stock as they can. And then by the morning, the stock's way up. And they in the morning they'll sell the puts, and everybody will be like, oh, you see, he sold the puts at 25 cents, 50 cents, and he lost, they might have made a fortune because now that they're long stock. So
Nice.
tricky. That's the tricky game behind the scenes that most people may not know. The profits sometimes on some of these names, the profits in these weekly type of quick plays, they're made in the stock after hours or pre-market when they're actually getting long the stock or trading it around. That's something for everybody to understand and know that just because you see the option trade at $1 and the next day after the announcement he sells it at 50 cents, he might have made more than it looks like he lost 50 cents. He might have made a lot more.
Right. Okay.
Okay. All right.
Nice.
Good. So that's just something to think about. Those are the EV names we talked about. CCL, NCLH is the same. They've all done well. I mean, we talked about it a couple of days. They were buying calls. It worked. I suspect people have either sold the calls now or they have shorted stock against these to lock in some of those gains. It all pertains to the reopening of the economy. So one other name that we've been looking at and we saw today was, did you see this LVS?
Yes. LVS. Yep.
LVS. So let's take a look at LVS first on the chart before we look at the options and try to figure out what's actually happening here. Remember that their CEO passed away, and Eldison. So you got shuffling of management, probably new ideas coming into the name. They got out of Las Vegas, focusing on Macau. New York City's there's been talk of New York City trying to get some casinos, and right around I think it would be Queens and Long Island. And Las Vegas is rumored to be potentially a player there, Las Vegas and Wynn. So maybe they're not completely out of the U.S. But here, this is obviously a good trending, sort of trending line here. But what I would say here is that, again, you have, if I'm looking at, I just my eye is trained to look at this stuff. So I because I like it, I like the MACD diversions as clues. But here you have a sharp move higher with the MACD making a sharp move higher. And then you have a pretty sharp move down, 66 down to 59, back up to 66. On the way back up, the MACD doesn't make its high. And then it has another. So this is, although it's a small difference, it's still a difference. It didn't recapture the high. And then over here, it looks like it's turning a little bit. So when you see this and you see this sort of channel, this is called the channel, as opposed to usually we're doing much more. And you can do it horizontal lines, or you can use these channels. But it looks like we're sort of in the high end of the channel. And remember, this is over here. We're looking at 67 was. This is normal, right, from last year. That's normal. So we're close to pricing in normal. Things have happened. Sheldon Anderson has passed away. New management probably looking over everything, and it's not making its new highs. And then add that. So that's the frame. That's how I would look at it. We're looking at something like, let's call it right around 48 to 50, 58. But if we have this sort of 166.5 to 58 is 8.5. 8.5 from 64.5 is 56.5. So first stop maybe somewhere around here, 56, which sort of goes right to that line. So I'd be looking at 56, and I would be looking at the 50 level. Okay, so that's how I would look at this. Let's see the trade that's going on here, which I think is interesting. It sort of goes into a question that we had yesterday. Let's look at the LVS. Looking at reopening names that have done well because of this, the economy reopening. We have the May
60s.
May 60 puts here, 4,000. Looks like the open interest is it looks like it's closing here because it's 7,800 on open interest. We look here and it looks, let's see here. This looks like it's a buy here, but I wanna show you something else over here. Always when there's a spread, when there is a spread, just by those numbers, it would look like a buy. But when there's a spread, computer's a little slow today.
There it is,
Yeah,
70s.
okay,
Yep.
so there it is, the 70s. So someone is going from the 60s to the 70s. Now 70s is way in the money, okay? And this looks like 860. I would suspect that this was a buy. Okay, I would suspect this was a buy and this was getting out. So I would have to check up on this and this open interest, but I suspect this was a buy and this was getting out because usually people come in to buy these in the money options as far as if they wanted to get a short. So in June, if they wanted to get a short here, they would buy the in the money options. Now, why would they do that? Why would somebody do that? Well, remember when you're buying an in the money option, essentially you're buying the in the money option, but what you're really, the optionality is really on the other side. So it's really on the other side. So when you buy an in the money option, the optionality that you're looking for is really on the other side. So if you bought an in the money call, then the optionality would really be on the other side. What does that mean? That means that if I'm buying the in the money put option, okay, I'm concerned about, I want to be short the stock, but I'm actually, so instead of shorting the stock, I actually want to short the stock and I want to buy this call. So buying the in the money 70 puts is the same thing. It's the same thing as shorting the stock and buying the 70 calls. Okay, it gives you the same profile. And why would somebody do that? Well, you know, there's one person in it that I know is in this name. Actually, here he is from yesterday, Las Vegas Sands. I don't know what he's got here. This is December 31st, and a lot has happened since December 31st for Melvin Capital. So he had 10 million shares here. He was starting to get out of it in December. Maybe he got out of more. Maybe he doesn't like it up at these levels. But he's someone that I have seen use in the money options out there, and maybe he's just getting short. But you know, he's buying the call. Why would he buy the call? Because what happened in GME, you know, and for the most part, you know, the puts, while they lost money, they probably didn't kill him. He was probably short a lot of stock. It's the short stock on a squeeze that loses money. This is defined risk. He can only lose $9, which $9.50, which gets you down to 60.5, right? So 70 minus 9.5 is 60.5. So he's essentially shorting the stock at 60.5 here. And he's protected by basically just owning these puts. He can't lose more than that. He can't lose more than the 9.5 that he puts up. In the same vein, if he was short the stock and he bought the 70 calls, he couldn't lose more than the 9.5 because he would be short the stock at 61.88, and he would buy these at $1.50. 61.88 minus $1.50 is 60.38. Okay, right around 60.5, where we were talking about. Okay, so this is, by the way, what I'm talking about here is that there's been a lot of questions. I've had a lot of questions over the last, let's call it 2 weeks, on this in the money stuff. And, you know, again, to understand it, and I still think this is the most important. This is one of the most important videos in 3 steps. And it goes through put call parity, puts and calls, and how they're interchangeable with stock. And you know, there's 3 pieces to the options puzzle. There's puts, there's calls, and there's stock. Any 2 can create the third. So puts and calls could create the stock. Stock and puts could create calls. Calls and stock could create puts. So that little puzzle, when you understand that little puzzle, all of this starts becoming, all this that we talked about starts making a lot more sense, and it becomes a lot clearer. And in that, it's 20 something minutes, but if you can, I tell people to look it over. I ask them a question, tell them look it over again. Got to go look it over 5 times. You actually have to do the work. I show graphs and I show different things, and then I show examples. You have to do the work. You got to convince yourself that this is how it works and this is what it means. And once you do that, that's, by the way, no one's an expert unless they understand that. Not even close, right? To be experts in options, they know that cold. Like, you ask them about put call parity, and they understand, you know, the dynamic of how it works. They know it cold. So, you know, to elevate your options game, that one video, I believe it's one of the most important videos in 3 Steps to Profit. And I teach it I teach put call parity in a much different way than most people do. And, you can go find put call parity in a textbook and it'll blow you away. I mean, it's like, I mean, it's something else, I mean,
Right.
it's good for, it's good for sleeping, instead of taking sleeping pills, I can just ask you, give me a summary of chapter 8 and you'll be out cold within the third. So that's a very good lesson to go through. So that's the Las Vegas Sands in the money options. It looks like someone's getting short there. And you can see from the chart that, again, we were looking at it. The stock right here is looks like it's turning a little bit, although this is a great chart. So maybe this channel gets it down to 50s. I don't know exactly why. And I don't even know why it's down today so much. It looks like some of these reopening trades are having a little bit of weakness. Okay.
Yep. Yeah. One more recovery trade I've seen was American Airlines.
American Airlines. Good old American Airlines.
Yep.
Let's take a look at the chart. American Airlines. We've looked at this for a while, and this one, just real quickly before we look at the option, we'll start here at the bottom, 11, somewhere around here. Let's call it 15, somewhere around there. Okay, 18 3/4. So it's getting a little murky up here, but definitely let's call it 26. And then something's going on. Maybe let's call it right around here. Okay, so this is how I look at the board. And what level is this? Just to have it in mind. This one was a rejection at 22.5, which happens to be somewhere here. So it's a little murky up here. Things have sort of gone a little bit different than what we've seen coming up here. This has been steady. And remember, we have this is normal somewhere around here, right? Normal.
Yep.
And that's what we were sort of looking at. And we saw over the last few months, when stock at 17, 18, right around here, we're seeing call buyers, right? Call buyers. Over here, we started seeing call sellers. So people are taking their profits, and in fact, maybe a couple of puts here or there, but mainly call selling, people taking profits up here, right? Right in this sort of drop here. Okay, now what are you seeing here?
Maze.
It feels like people are paring down. That's what it feels like in this AAL. You see how CCL traded and NCLH traded up and then sold. So it feels like they're willing to play an announcement, but in general, the market's being sold as far as these names. Maybe it's just saying it's had a much more of a run than it can handle right now. Right. May, looks like there's 2 here. Okay, so May 21. So they're 24. So they're buying these. Let's take a look at what they're doing. Let's see. Are they buying these? Okay, so one thing I would look at here, the first and foremost, we're always looking at this. I try to graph this yellow line to show you where the IV is, right? This is the line I'm looking at to determine a buyer. And I'm also trying to gauge where it was the day before. So the day before it was 57. Okay, it was 57. And today, when they're buying it right at 953, they're paying 56.1, 56.6, 57.4. The numbers look like they're going somewhat higher, 58, 58.3. So that's telling me that in general, it's a buyer. Okay, it's a buyer. So I'm getting comfortable that this is a buyer. The next thing I look at is I'm saying, okay, they're buying calls. What's happening to the stock? Okay, so right around here, okay, it looks like the stock had made its move. Now, usually when someone comes in to buy this amount, there's some, either they let the market make us trade it, or there's usually some buying ahead, right? A little bit ahead for the deltas and whatnot. So as it's moving up, there's some deltas here. As you get down here, it starts coming straight down. So to me, it looks like someone was actually buying these calls. It's a lot of calls. So someone's buying these calls, and maybe they're selling stock. They're basically saying, okay, I'm going to buy 2.4 million calls, okay, out until May. I'm going to get my earnings, but I want to be out of this stock, right? Goes with the narrative that we're seeing in CCL, the NCLH, we're seeing in a lot of these opening trades, Las Vegas Sands, and is being shorted. And now we have AAL. Again, it just the narrative is that they were taking profits right around here. Okay, they're taking profits. Now remember, we were talking about AAL for a while. Stock has made a significant move. This is normal. Are we at normal? Again, you take a look at the internals of an airline company and you say, is the business section going to be filled up the way it was over the last 10 years? Probably something has changed there, right? More work from home, more Zoom. Why do companies have to spend, to send a team of 2-3 people to go present in front of a company, just to present for the first time, or to meet a company, 300 miles away in another state where they can't drive. They're just going to jump on board a quick plane. I don't think that happens anymore. Back in the day when I was doing it, it was thousands of dollars of bills, because you're getting these flights in a week's notice or a couple of days' notice, so you're playing top dollar. 2, you're sitting in business class. The costs are enormous for companies. Right. And now you can just do a Zoom. You don't even have to pay for. You can do a half-hour call without even paying anything. You jump on Zoom or something like that. So, but most of these what does it cost? $100, $200 to have an enterprise thing. So you can do this now for very, very cheap, and you can cut down your business expense costs dramatically. And believe me, all of these banks, all of these big customers who are flying planes, and I would say by 50-60%, they're trying to cut that down. Right. And so, is normal the way we saw normal over here. I'm just not sure that that's the case. So if you shifted this up to be around here to take into account for business class, maybe we're at normal, and maybe that's the reason why the risk reward is not as exciting here anymore. And let's wait and see what happens. Let's actually see things come back. See people come back, be on planes, and really see normal before we start saying, okay, now let's look at the airlines as a viable business and viable industry that's going to survive and thrive in this new era. It makes sense to me that the narrative is to sell these stocks here. That just is, to me, it looks like good risk reward. And right there, you see it. We're framing it correctly, and it looks we're a lot higher than where we were. Disaster was obviously below 10, and now we're at call it 25. So it's a big move for some of these names.
Yeah.
All right.
Fair enough. Here's a funny comment from Rudy. Why take a plane? We can zoom it, only dress from the waist up.
What's that?
Exactly. That's how we did it.
Why take a plane when we can zoom meet? Exactly. Jesus, it's a bad visual. Yeah, that's funny. All right, let's see. What else? What else have we seen? Let's look at FUBO. FUBO is a good one.
Yep.
FUBO is a name. Man, you get a lot of heat talking negative about a stock.
Oof.
The hate mail just comes flying through the door. But let's take a look. I mean, look, FUBO is trading down 5%. I'm gonna call it the way I see it. It looks weak. It just looks like a weak puppy here, just screaming to try to get back. But you look at the flow, and the flow over the last week has been positive, right? Yep. Has been positive. So we're looking at next week flow, and you look at this, and it's 26,000 options traded. The other day we were seeing, I think it was this week, options where the open interest was here. They were just buying the 20. I think they were buying higher ones. They were just buying a lot of these, the 28s.
28s,
I think my opinion is, if there's so many call buyers here, this is a lot of call buying for someone. Why is the stock getting drilled? That to me is a little bit of a sign, and a little bit of like, what's really going on here. The stock. I look at this and I go, okay, let's talk about FUBO. Okay, on this side of the mountain, I'm thinking, wow, I got to load up on these calls. This looks pretty good. The stock is starting to turn. Even over here, you're starting to see things move, and you're thinking, okay, the call buyers in control here. Calls, the stock buying happening. Call buying. The stock is flying. Here, there's a lot of people stuck, and you got this big level right here. Okay, big level, and you got a lot of congestion after this sharp move from 34 to 20. There's a lot of congestion here. Okay, and we're talking about the next move in the next 4 weeks. If I had to guess, I'm guessing here. The options is pointing this way, and you have to look at each separately to try to help you make a decision of what you want to do. But the way I see it, it's negative. That doesn't mean I don't like FUBO.
Right.
FUBO is a great concept. It's just, it's having the relationship between the concept and the actual stock price today, not 5 years from now, not 10 years from now, but today. And I think if anybody wants to see, I'm not going to go through FUBO again, but we put out a video just a couple of days ago. So just, take a quick look if you, let's go YouTube. Where are we? Let's just see what the hell we are. What are we doing here? You can always go to the YouTube channel and do what? You can click right here, go FUBO, and voila. This is us talking about it in the last week. And you could start seeing what we're saying. I was saying it 2 months ago as well. This is, there's something to be said about valuation over the long term. But there's also something to be said about momentum in the short term. Right now, I think FUBO is losing in both sides. This is the momentum game. It's down. That's momentum. It was winning here. Now momentum switched. So that's one. And then on the valuation, it's up for grabs. No, when you have a fantasy stock on what could be in 5 years, it's hard to argue with anyone. I mean, there's no argument. It's the market's going to be 200 billion or 300 billion, or it's going to be 50 billion, and nobody knows. But that's how people try to make their decisions. I'll give you, we'll switch from FUBO. Look, they're buying calls again. I don't know why. I don't know why they're buying so many for next week. The stock is very heavy. So I don't know. I don't know what that person is looking at. I see them buying calls, but if they're buying calls, the stock is cheap. And the stock is cheap. Why not just load up on, if you knew something was happening, you'd be loading up on stock and buying calls. It doesn't feel like that. It feels like somebody might be actually shorting stock for whatever reason over the next couple of days and maybe just buying these as a decoy. I don't know. It could be a little bit of that as well, where people are, they know something different than everybody else. Right. What does it cost them? It costs them $1.5 million to buy, 20,000 calls and then tell everybody in the world that the stock is going to 30, and take a look at this and look what we're seeing here. And everybody starts talking about calls and gets everybody in. So it costs them $1.5 million, but in reality, they're shorting $50 million worth of FUBO because they think it's going to 15, because they know the answer. It could be that. And from what the chart is telling me, man, it's got to be some wild announcement for it to actually turn the ship without having it, break through 20 quickly and shoot back up. This is my quick read. Another read that I'll show you today is, Draftkings. So same online sports gambling, right? Online sports gambling. So let's take a look at it. You're looking at a 6270 stock. The stock is, so this is a strong chart. There's no doubt it's been pretty strong for a while. People have been trying to short it. What's driving this market and where people are, call it debating, is how big can this market be, right? And then they're disregarding all the metrics that people would use for valuation at that time. So, you could say the market is going to be 100 billion in sports gambling. You could say Kathy Wood says it's going to be 180 billion. My question is, when I hear those numbers, and that's probably international, when you look at DraftKings, first of all, they're losing money. They're losing money right now, hand over fist, and they're spending a ton in marketing. Okay. And the bulls say that's okay because you get the client in, and then you actually, he stays and he keeps gambling. Your marketing costs will eventually go down. We get that story. The question is, you look at this, and I've done a lot of reading and hearing both sides, but you look at this New York City announcement. There was an announcement yesterday. So New York, Cuomo says we're going to allow gambling, online gambling. There's a caveat, though. He didn't do what everyone wanted him to do, or at least the people that are probably paying all the politicians to make him do something. He basically said it's going to be a limited operation. So it's going to have two operators, which is probably FanDuel and DraftKings, but there's only going to be two, and they'll be able to give out some licenses to a couple other either operators or casinos. Either way, there's two. He's following this plan that this program that New Hampshire did. New Hampshire takes 50%, 49%. DraftKings takes 51% of the revenues. So Cuomo is out there saying He's not trying to make the casinos rich. He wants New York State to get the money. So now you have one of the biggest states in the country, especially when it comes to gambling, okay, sports gambling, okay. They will split the revenues with DraftKings. What if that becomes the model? How does that get put into? I mean, if everyone says, "I want 50%," we want 50%. We don't want it to trickle down, and then we tax the final casino who's got the people coming in. So we want the 50%. What if California does it? What if the bigger states do that? You start talking about margins being squeezed. So yeah, the business, and let's call it $100 billion in 10 years, in 9 years, in 2030, maybe it's $100 billion. Call it $100 billion market, right? And the take on $100 billion market is, let's call it 10%, 8 to 10%. So, you start going down the ladder and everybody's taking a slice of what it is. And you're going to say, okay, DraftKings is going to make, because they own 25%, or they might own 25%. There's so much competition. So there's a lot of variables and a lot of guesses that people are making. That's what makes a market, right? That's how you would think about it. But I think the point that I'm getting to is that today, DraftKings opened up yesterday afternoon. It traded up $1.60 on the New York State, approval. And I think if you knew the story and you understand the story, I think that was more of a negative, because it wasn't so much that that New York State was going to approve it. It was highly likely that they were going to approve it, in my eyes, because the state needs the money, but the state's not going to just give it away. They basically want to share in the profit. So it's a profit share with the two, likely at DraftKings, that are the two operators. So this is a little bit different than what everybody would want. And I think that when you start looking at the details of that and you start doing the math on New York State, I think it forces you to start doing the math across the country. And then you got to start asking, can they really keep their customers by reducing? So they're going to spend all these marketing dollars up front and then pull it way back in order to make some money. That's the only way they can make money. And will that work? Well, some people are going to argue that there's going to be they're going to stop, and FanDuel is going to keep on pumping in marketing. What's that going to do for DraftKings? DraftKings, no marketing, and just hope that everybody stays, when everybody's doing discounts and betting, parlays, and giving you money to sign up. Come over here. Right. We'll give you money to play. If you play 20 times a month, we'll actually pay you $100. Whatever the gimmick is going to be, these guys aren't recreating the wheel here. It's sports betting. It's been around for decades, and now it's just going online. So I have a belief, if you will, that if something is not brand new, it gets commoditized, right? If you're making profits, I'm going to come after your profits, right? And some of the biggest players in the game, that Las Vegas Sands, Amazon, Amazon's not even in it. But if they ever wanted to get in it, how easy would it be for them to just say, oh yeah, we can have a sports book on, because they're buying all these franchises, and Amazon is actively bidding for these franchises. Who's to say they won't do this as well? If the margins are high enough, they can just flip the switch. There's nothing proprietary. It's a sports book, right? It's a sports book. So this is, again, something that I find interesting. It's an interesting story. There's literally two sides to the story, and both sides are equally passionate. But when I see someone come in, and the point is that today, because we're talking a little bit more about trading in the last couple of weeks, because we're seeing these 1 week plays, but DraftKings, there was a buyer of the 52.5 puts. You could see them here. Let me show them to you. So, in the morning, I'm watching the news and I'm looking at this and I see, okay, how is the market going to trade this? Well, these got really active this morning, the 60.5s and the 62s. And, I'm looking at this going, that's interesting. These look like people were long them already. So everybody's kind of long here, 9,000, 3,000, 5,000. And you're seeing, this says 3,000, 3,000 here, but this started popping up. And I just thought, probably not a bad time to maybe get into some puts shorter term for a trade. So that's what I'm showing you, is how to think about. And by the way, let's go back to the chart. You can again look at the YouTube channel just to give you an idea, so you understand how to use this as research, as sort of let's go back and look. We're looking at 1 week ago, maybe not. Here's why. We're only saying that because there were call selling. There was call selling and put buying right around here. Call selling, put buying right around here. And that could be like a BlackRock, someone that is putting on that trade, 70, 55, selling the 70 calls, buying the 55 puts. So in the backdrop, you have the big money, maybe unloading a little bit of stock. Okay, remember,
Right.
the big money is what drives these things, right? I don't really care about the retail dollars. They're the second layer. It's the big money. If they want it to go up, it's going up. If they want it to come down because they're getting out, it's going to be under pressure and could see some lower prices. That's the biggest layer you're looking for. And when I'm seeing that big layer position themselves in a certain way, and then I see the New York City announcement come out, and I say, that's not as bullish as people think. They got what they wanted. New York is going to open it up. Again, 4 months ago, that the stock would have been up $6. Today the stock's actually down because I think people starting to do the math. And so again, it's using the UOA to give you a backdrop for an idea that you need to actually develop, that you need to go look into and start reading and start thinking about the pros, the cons. What is the people who are buying this? What are they thinking? Okay, the people who are trying to short it or buy puts or think it's worth a lot lower. What are they thinking? And then, you know what? Like I told you the other day, the truth is somewhere in the middle, right? And it's your truth. It's what you think. And that's what it means to think for yourself. That's what we're trying to do. Just because I show you Draftkings call, selling, and put buying, that doesn't mean it's going down. It does mean that it's likely someone. I'm trying to read that tape for you. I'm trying to read the activity and show you that, that this is their positioning. They're probably long and they're trying to get out of some here at these levels. So I think it's important to appreciate what people are looking at and what the big guys are looking at, what they're doing, and then have your own ideas. So when the opportunity shows up, you can be quick. If you're doing the day trading 1 week type of thing, you can be quick on the draw. That's what it takes to be really good at the game.
Yeah. Nice.
Okay.
Great.
Cool. What else we seeing? What else you got?
Wells Fargo.
A couple of questions. Maybe a question, or you want to?
Yes.
Let me. 5 minutes.
Should we talk about the in the money, or we already?
Well, I think we took care of that. Yeah,
the
in the money, the Las Vegas Sand. That was a question from yesterday. Somebody had. If they have more questions, you can ask it.
Okay. Yeah, guys. If you have any questions, let's hop them in the chat, and then in the meantime, we can take a look at Wells Fargo.
Wells Fargo, sure.
Yeah.
Wells Fargo is another one that, they've been buying calls. The question is, they were buying calls for earnings. So the question is the earnings going to be good, bad, ugly? What's it going to look like? And I would say, so the earnings are in April. So okay, so the 40, we were looking at the 40, I think they were buying the 40, 45. So it looks like the 40, 45 calls, I think that's what they're getting out. It got chopped off here because it's what we're doing is a range. So if it's below a 10 delta, it just chops it off. But they're basically moving into what I saw earlier was pretty slow. I'm going to check my servers here. The 42.5, 47.5 call spread. So they're getting out of the 40, 45 call spread in April for the earnings, and they're getting into the 42, 47.5 call spread. Looks like they're paying close to 85 cents, 90 cents on that. I think Wells Fargo looks good. It's one of those names. The government punished them a couple of years ago on their assets, so they're bumping up against those limits. But once, there's been positive news recently over the last month that might be lifted, and if that's lifted, then they get to grow their book to a much bigger level. They did lose some money, I think, on the as far as perm brokering for Archegos. I believe they were part of that group, so maybe they lost a little bit. But at the end of the day, the opening up of or the release of more assets that they can actually go and lend out more money. I think they have a $2 million. I think they were held to a $2 trillion threshold, and they can then expand on that. So if that happens, it's super positive, and then you could see the stock trade. Let's go a little bit further back. The stock has a lot of room to go. So this is Corona, but they were having trouble back here. You can even go back a little bit further. Yeah. Okay. So they got punished probably somewhere around here. And, you're still talking about 47 is normal, but these banks, look at JP Morgan, it's gone beyond. They're well beyond. So you look at JP Morgan, it's exploded. Wells Fargo, I mean, obviously it has problems. JP Morgan is this pristine company. Wells Fargo has messed up tremendously over the last 2 years. So you have some issues on whether or not it can actually, getting back to 50 would be super positive for Wells Fargo, while JP Morgan will be screaming. But there's a lot of room here. And I think people are trying to play the laggard and that things turn around. So all we've been seeing is call buying in Wells Fargo. And then if you look individually at the stock over the course of the last year, it's not doing anything bad. This is a little bit of a MACD again diversion. Okay, but the fact that it's trying to reach its high again sort of negates that. So a little bit. I would, this right here is 1, this is 2. You see this is down, right? While this is up. Okay, so that's a little bit of a diversion. This was also down, but it's still hanging out here. It literally came down and then it said, nah, you know what? We like it up here at 40. So, this is a bullish development. And I think that, I think they think earnings are good, but I think they need more time. So they're playing all the way up to 47.5, which is where we said 47.5 actually happened to be where it was back to normal, if you will, 47.5, 50.
Right.
All right.
Oops, sorry. What happened here?
Good.
All right, here we are. Cool. Okay.
There we go. Any other questions? Any other ones real quick to look at?
One question I have from Priya. She's saying, I see a lot of unusual names on the UA board, and she mentioned Square as one.
Square is one of those names that is it's been trading a little soft, but it's showing signs of trying to get back on the train here. You have the MACD all the way down here, but let's just frame it. People love the name, and obviously it's a game-changing technology. Let's see, 280. So this wasn't sort of looking so well, where you had this, it looked like a Head and Shoulders, right? Where it would be, Head and Shoulders would mean like it would come up like this, down, up, down, this, and then down like that. That would be sort of a Head and Shoulders. That would be a top. So the fact that it's doing this now, it came back twice over here, once, twice down. This has come back once, twice, 3 times. This is now starting to look a little dangerous at 250 for a breakout. And you break through this, it's going to look like a W. It flips, right? So, this is why techno analysis, you have to be, you can't be a stickler on everything that you see, because if it does turn, then you got yourself something that looks like this, and then it's like off to the races, right? If again, good market, give me a good market, and this thing trades 285 through 285, probably, well, at least to 285, but it's going to start looking for higher prices. So a good market. I'm not talking about, I'm just talking about a decent market that's not crashing, that's not coming off so hard, and you're going to see something like Square take off. This is a positive development if it can get through here and start making its way towards the high again.
Cool.
What are they doing in the options?
I don't see much. I just see if this week, a big trade in this week. Yeah.
This week. Is this a spread here?
Doesn't seem like it.
No. And let's take a look at this one. No. Okay. 64. I mean, the volatility is down, but in the morning, it looked like they were paying good prices for it, high prices. So volatility, see the volatility came straight down afterwards. So it looks like they bought it 66. They bought it in the morning and then immediately started coming straight down. So I would say that this might actually be people taking Is it possible that they're taking profits here? No, because the open interest is. It looks to me like these might be sales.
Mm-hmm.
It looks to me, I'd be more inclined to think that they are sales just because of the way it came up. And by the time we're here at 10:30, the vol is coming down to 60. Let's take a look, 50. With 1 week, it's difficult because every 10 cents is worth like 10 vols. That's why you see that it shuts off, right? The data provider shuts off the at the money applied vol. I agree with it because it's not really IV, so it becomes difficult to actually say what transpired here. With the stock up, I'm sure a lot of this was buying. This actually looks like it might have been some sort of spread, frankly, where it was, buying the 240s, buying the 245s, maybe selling the 250s, or they bought it in the morning, bought it right out of the gates, and then as the stock moved up, they sold these. I'm not entirely sure. It's always difficult when it's same thing with Apple. When there's so much trading, it's hard to figure out exactly what one person might be doing. This is a name that a lot of people, especially when it's trading up 3-4%, that a lot of retail is also running around trading 1 to 10 lots, and that could muddle the story up a little bit. So right. I would say I gave my chart analysis on what I think there, but I would say that 2 week options, I have no idea. 2 day options, I have no idea.
Okay. Yep.
It looks like just messing around, I didn't even have to look at the announcement today. So there's the thing. Why it jumped. Maybe this tells us real quickly. Let's just take a look. The monkey's running around the wheel. Okay, popped. French investment bank auto-initiated coverage. Oh, so Barclays just raised its price target to 330. Gotcha. Okay, so it looks like people raising their price targets, and that caused a jump in the stock, which would lead people to come in and start buying this on the open. Let's see here. Square on the open was. It's gonna come in on. Let's do it this way. Square. So Square opened up 2 minutes. Square opened up at 237. So this was all probably mostly call buying in the beginning, and then maybe you saw some 250 call sales. So they bought the 240s, 245s, and then as it trades up, maybe they're selling the 250 calls against it.
Mm-hmm.
Did you see how that could have happened? Right, so I would take a look at time of sales and sort of go back and say, right at the gates, out of the gates, they're buying calls. Okay, they're buying 245s, but it looks like it's more of a trading. People use these things to trade a little bit too. So they're buying this, especially 2-day options. It's really more, they know what it's worth, they know what people are saying, and they come in to buy it.
Nice. Wow, I can see the difference in premium.
Yeah, it's huge.
Since the get-go. Yeah.
Huge. All right, good. Any other ones? Last quick. Actually, no, time's up. 2:05. We'll do it tomorrow. Put it in the thing. What was that? I remember you, Felix, recommend SQ1 was trading 4 or 5 times quick, or the stock is moving. Exactly. All right, let's come back tomorrow. Let's see what we see. But we're seeing in general, it looks like the EV space, this profit is still showing weakness. Profit taken in the reopening names. One name that we didn't look at that might be interesting. We saw some Beyond Meat calls, call buying this morning, but the stock traded off, so it might have just been someone buying it to sell off, and that's all I got for you.
Cool. Sounds good. Thank you, Felix. Thanks,
Goodbye.
everybody.
All right, be good.
Like the video, subscribe, and we'll see you tomorrow.